At Direct Note Sellers, we allow you to break the mold and allow you to become the bank. The American public has been conditioned to handing over their hard-earned savings and their retirement funds into the hands of third-party investors such as bankers, fund managers, stockbrokers, and a host of others. And from that very moment moving forward, your money goes through a quite amazing process. The investment bankers that work for banks, fund managers, stockbrokers, take retirement savings and they promise you, the depositors, a return, typically anywhere from 0.5% to 2%. With tens and sometimes hundreds of thousands of depositors that place their money into the bank and or the IRA pools the depositors' money together, at which point they make an investment that brings in a high yield. And in passing your money over to the bank and allowing them to invest it, at that point you are locked into an extremely low rate. However, remember, a banker's or a fund manager's job is to make the bank and the fund a profit. Without making a high rate of return, they cannot support their overhead of maintaining the brick and mortar locations, advertising, and a host of other capital requirements. In addition, there's hefty salaries for the senior members, and we, as the investors, we as the people who have allowed them to use our deposits to make a high yield investment, we become a secondary consideration. So what happens is the bank, typically making anywhere from 6 to 12%, those loan returns return to the bank. If it's a 9% return, the bank takes 8.5% of that, and they provide you, as their customer or their depositor, typically about a half point of interest. They take all of the profit and leave you with the pittance. And at the end, we all end up feeling a little bit foolish. Well, a similar thing happens to people in the stock market. Now, the stock market is fueled by institutional-grade investment firms on Wall Street that capitalize on their inside information and the in-depth research into the companies that they invest in. They're better educated, they're more in the know, and they've got more communication. And these institutional buyers will charge you a very steep fee as a client, or you can play the markets on your own. And this is where it gets real tricky. With all of the education that the stockbrokers and Wall Street money market managers have available at their discretion, and due to information that folks like you and I are not privy to, if we look to the bottom left on the low end of the bell graph here, that is the point in time when it's initially an IPO or initial public offering. It's at this point in time that the institutional investors start gobbling up the stock. Now, moving towards the center, if we watch during the period of time when the stock is rising, about halfway up that bell curve is usually when we hear about the stock, or when a friend buys the stock and he makes some money. Then it's on the cover of Time magazine, and then that's when we buy the stock. And this is what's commonly referred to as the period of exuberance. And we see our stock go up a little bit more, but it levels out and it starts to make a downturn. And as that price starts to decline, we're hoping that it's just temporary. However, by the time that we see it starting to drop significantly, now we can't sell it because we would be selling at below the cost that we had purchased it at. And we pray that there's got to be a comeback, and then at the very end, after we've lost money on the stock, we dump the stock, take a bath, and at that point in time when it hits the lower end of the bell curve, that's usually when the institutional investors come in and start gobbling up all the additional stock before it levels out. However, here at Direct Note Sellers, we've allowed you to become your own bank. All notes that Direct Note Sellers deals with come directly from the loan originators. There are no middlemen and no brokers. All notes that are purchased by our clients are collateralized by high-quality A-grade property. Remember that a financial instrument is only as good as what it is collateralized by. All loans are written to extremely well-qualified investor-grade borrowers. We do not deal with owner-occupants, and we do not deal with high-risk loans. Typically, the people on our notes have put down anywhere from 25 to 40% cash down, so they have no incentive to walk away from this. And we also provide very deep equity positions on notes that are exclusively first lien positions. In other words, if you're buying a note for $50,000, typically the valuation on the property will be $100,000. And in addition, we provide additional safeguards for all of our note buyers, which include referral to a professional loan servicing affiliate who collects and tracks the loan payments. We close at our affiliate title agency. A full lender's policy is issued against each property. Note buyers are added onto the insurance premiums as additional insured so that they protect their investments, and we provide great communication skills. For more information on our note availability, please go to info@directnotesellers.com or click on our contact tab. Thank you very much.